Everybody, and welcome to the Vancouver Resource Investment Conference channel. My name is Jesse Day. We are bringing the VRIC to you each and every week with our series of expert online panels, and we have a legendary one lined up for you today. It is Egon von Greyerz and Matthew Piepenburg of Von Greyerz AG. We're going to be discussing the global monetary system, government, geopolitics, and of course, gold and silver. Gentlemen, it's great to have you both on the program.
Well, very good to be with you, Jesse.
Yeah,
I'm going to enjoy this, I'm sure. Both of us.
Looking forward to it, Jesse.
Now, I want to start with a tweet you made recently, Egon, where you said the US is the highest debt nation in the history of the world. It's getting worse every day. They will be paying that debt with fake printed money, which will be worthless. The inevitable collapse of the currency is on the horizon, like all currencies in history. Now, this is something that's been mentioned by a lot of people. Of course, the timing is the thing that's so difficult to determine, because some people, your Brent Johnsons, believe that the US dollar has a long ways to go. In particular, perhaps some other currencies are looking weaker, but it's the dirtiest shirt in the laundry pile effect, and that it's going to have strength for some time to come. You have some people on the other end of the spectrum, perhaps someone like Peter Schiff, who thinks that a collapse in fiat currency is more imminent. How close do you both think we are to that end game for the dollar, and what will come after? And Egon, I'll start with you on this one.
Well, Jesse, we are in the end game. This is not an overnight game. This is both Matt and I are students of history, and we know, as you mentioned, that over time, not a single currency has survived ever in history, ever. They all go to zero without exception. There has been about, just since 1700, there are more than 500 currencies that have died. And now, since 71, since Nixon closed the gold window, as we all know, now the current monetary system is on the way of self-destruction, helped by governments and central banks. And as we all know, or not everybody may, but this time we're down 97 to 99% in every currency since 71. So we are now in the final 1 to 3%, taking it to zero. That's going to happen. You know, we learned that forecasting is a mug's game, and to decide the date when the dollar is going to die, or the euro, etc., it serves no purpose. Investors, governments, we got to prepare for it. And if you are an investor and want to protect your risk, you already have protected against this. You know, since 71, as I said, measured against gold, everything is already worthless. So that final 1 to 3%, whether that's, you know, that is 100% from now, and whether that takes a year or 5 years, it doesn't really matter. It will happen. I think it could happen faster than we believe, because just take the de-dollarization. That's a fact. If you just take China as an example, now the cross-border payments in China, now it's now the renminbi that is dominating that, and it's something like 40 or 52% of cross-border payments, whilst the dollar has gone down to 49. That's new. That is a big shift, and that's going to happen across the world. Now, there is no prize for being second to the bottom or third, but you know, so whether the dollar falls a little bit slower, I think Brent Johnson is an interesting theory. It absolutely serves no purpose in my view, because yes, so the dollar might be stronger for longer than the euro. Who knows? But it doesn't matter. They're all going to collapse, and they all already have collapsed. So that if you're playing currency, yes. But if we are in wealth preservation, that we are helping people to protect their wealth, you shouldn't hold dollars or euros or yen or pounds. You should hold gold as your main currency to protect against what is going to happen and what is inevitable, whatever time period that is over. So therefore, we are not actually forecasting when it's going to happen. I think because of the US debt situation, I'm sure we'll come on to that, it's going to probably now, with the level of interest and we are now in the exponential phase of debt creation. And I've explained many times in articles and interviews that that exponential phase goes very fast, and we are in that now. So Matt, do you want to comment on that? Or?
No, I agree. I think it's a mug's game to predict, but we don't have to predict because it's happening in real time. It's not sensational. The purchasing power of all the major currencies since they took away the gold chaperone from the world reserve currency in 71 is objectively, empirically in decline. So measuring the best horse in the glue factory or the best patient in the ICU is irrelevant. I don't want to be the best patient in the ICU or the ER. I want to be out of the ER. And again, this is a very misunderstood topic. And it's not, I think it's often shunned by the conventional Western thinking in particular, and risk asset followers or speculators versus wealth preservers are very different motives. It's very easy to shun the gold narrative as dramatic because it's not fun at a Christmas party, right? It's not fun to discuss. But you can't deny, regardless of the liquidity needs of the dollar and the demand for the dollar of Brent Johnson's milkshake theory, which we've talked about directly. Of course, the dollar is king for liquidity, but you're measuring your liquidity in an ice cube that continually melts. Again, this is not sensational. This is history. And the sins of the West's past, the mismanagement of its monetary policies, the mismanagement of its debt policies, you can buy time, you can have that exorbitant privilege for decades, but inevitably when you're spending far, far more than you're creating and your debt levels are becoming irrational, where you're talking about trillions, which I've said before, are abstractions, and you're supporting that debt by issuing IOUs that less and less of the world wants because the debt is so high and because the currency and the IOUs are less trusted. I mean, China and Russia are key buyers of U.S. treasuries, and they're now net sellers of U.S. treasuries. They're trying to move away from the dollar. In Japan's case, certainly, China and Japan, but in Japan's case, they need to sell U.S. treasuries so they can buy more of their JGBs to try and control their yields. They're desperate. Obviously, China is selling U.S. treasuries because they're more in bed with the BRICS mentality, and since we weaponized the dollar against Russia, there's just an obvious move away from an indebted IOU and a devalued U.S. dollar. And so the relative strength is fairly irrelevant to those who look at money, which is gold, and look at gold as a wealth preservation asset, as a rock that they can rely on, as opposed to a speculation asset that they're comparing to a narrow S&P and an NVIDIA-driven NASDAQ. So again, these are not sensational anymore. And I agree with Egon. We have a lot of economic data and numbers and stats and spreads, but it's history. At the end of the day, Egon and I joke all the time, we're more historians than economists, but economics are a very important part of history, and no one wants to see it. Their heads are in the sand still, chasing a very narrow risk asset market.
Well, Egon, you mentioned the massive amount of government debt that's being accumulated in the US and in many places around the world. I wonder where you see that whole situation headed, what the end game is there, because it seems like the politicians in power are focused on a very short-term game, which is to garner favor for as long as they're going to be in office. It seems like they could really care less once their term is up, what happens to the economy or what happens to the citizens. How does the whole debt game end in this situation, both in the US and globally as well?
Well, just to start talking about politicians are instruments of their time. And since we're now at the end of an era, it's an ugly era. It's an era where all values are gone, moral values and ethical values. And also, when it comes to running a country, there is not a statesman anywhere in the world today, basically. It's all about, as you said, short-term survival of governments, which is all about buying votes, basically. And that's what they're doing through money printing. And so that's why we are in the end phase, and that how is it going to end? Well, as we said in the previous question, it's going to end by, it's not going to be in an orderly way. Of course, they will continue to fight governments. Governments will continue to fight and escalate the money printing. And this is when, as I said, coming back to the exponential phase, that talk about how you fill a stadium with water with one drop at a time and doubling every minute. after 45 minutes, the stadium is 7% full. In the last 7 minutes, it goes from 7% to 100%. And that's what we're going to see in the next few years. I mean, I've used a simple statistic with US debt, federal debt. It's gone from $1 trillion when Reagan became president to 34, 35 trillion today, whatever you want to, or not quite that, but almost. It's going to be it's just on average is double every 8 years US debt since Reagan. So just extrapolating that, well, that's without fail. That's averaging it. So we're going to be 100 trillion by, I think, 2036. 100 trillion debt. And just thinking about what the interest will be there at that time. Of course, you cannot go from mid-30s to 100 trillion without, during long periods, having a very high inflation also. So interest rates will be high because we are in an interest rate cycle, in my view now, that's going to take at least 30 years or so to peak. We went from 80 to 2021 down, and 1980 I'm talking about, down, and now we've turned. The cycle is up. It's not going to be straight. But high interest rates will be with us, including high debt. And that is, as we discussed just now, that is a recipe for disaster. So there'll be the system, there will not be an orderly reset, not be an orderly restructuring at all. It'll be disorderly. They will desperately try to print money, but we can't just print worthless money to save a system which is already fatally wounded. And therefore, there will be a debt collapse at some point. Governments will lose control of the situation, and government will change frequently also, and countries will probably also break up, including the United States. And therefore, as I said, we will have a debt collapse, and we will, when debt collapses, and you know, the derivatives is a quasi debt also. And I think derivatives are maybe 1 to 2 quadrillion, not the 600 trillion that the BIS in Basel says it is. And that will become debt also, is debt already to some extent, but will become real debt because it has to be repaid when the derivatives market fail. So you're talking about so much money that can never be repaid by printing money. Therefore, you will have a collapse, debt will implode. The assets that this debt are backing will also implode and will come down to a different level, as has happened at the end of every monetary period in history. So whether in between they try with a new dollar number 2 or a CBDC, etc., it's not going to solve anything. That is all going to be, again, fiat money. The system has to implode. I'm not going to put any time on it, as we discussed before, because we don't know, of course. But it's inevitable that will happen. History tells us that. So that's what we're going to see. Whether I will see that in my lifetime or not, I don't know. If I live more than a few weeks, I think I will. But as I said, you'll let me know afterwards anyway, one way or another. So that's what I see as the end game, a disorderly collapse of this monetary system, as von Mises has said, and many others also.
And Matthew, I'd like to get your thoughts expanding further on the CBDC concept. You know, I spoke with E.B. Tucker recently, and he said a CBDC is 100% coming. You'll take it and you'll like it, and they're gonna get people through their phones. Is kind of his thought, that they're gonna program something in the phone. You're gonna be forced to use this new currency. It's gonna severely limit freedoms, etc. As Egon was saying, that's ultimately not gonna be a sustainable solution, and that could collapse as well. But obviously it could cause a lot of pain and hardship along the way. So what are your thoughts on CBDCs and where we are right now in the potential future rollout of that sort of digital currency?
Well, I've never been reticent or modest to give my views on the inevitability of CBDC. It's the inevitability of desperation. It's the inevitability of masking failure with euphemisms and, you know, clever uses of capitalized letters to hide what is really a massive problem. I mean, Again, I wrote an article called The ABCs of CBDC. I think it was over a year and a half ago, 2 years ago. I mean, even during the height of the COVID hysteria, the IMF was already telegraphing, like an intel agency, the inevitability of a central bank digital currency, given the incredible debt crisis of which COVID was to blame. That's an open lie. COVID was not the reason for the debt crisis. The debt crisis existed long before COVID showed up. And they were comparing COVID and the debt and the disaster for the world to World War II, which again, as I've said many times, as anyone who studies history would know, it's an insult to history. The 85 million who died and the destruction of the geography, the agriculture, the industry, the banking, the infrastructure of most of Europe, not to mention the Russian population. To compare COVID to that and therefore usher in Bretton Woods 2.0, which will be characterized by some form of central bank digital currency, which is already happening intra-bank right now as a payment system, efficient payment system. That's a very big euphemism for more and more control. Centralized control always follows in the wake of a debt-soaked nation empire regime that's over its skis in debt and absolutely incapable of taking accountability for their own sins. The sin is living beyond our means and then solving that with mouse click money, and then blaming the inflation that follows on everything from global warming to little green men from Mars to a virus which was man-made and mishandled to the bad guy in Russia. Whatever it takes to avoid responsibility for basically, as Egon said, buying votes by creating money out of thin air, and to support the bond market and the credit markets. The credit markets is the rotten wind. We've gone too far in our debt. We have to buy that debt ourselves with money created out of nowhere. And that is debase. That is debasement. So it's either we inflate or we default. We won't default, so we'll inflate. And when that inflation becomes extraordinarily obvious and not misreported by at least 50 to 60% by the BLI, the CPI, the BLS, then they'll need to create central bank digital currency as the cure-all. That is purely Orwellian in the end game, whether, Powell can say cash will still be available, privacy rights will still be secure. Well, that may be true for now, but that won't be true 5 minutes later or 20 minutes later or a year later. It inevitably metastasizes into more and more centralization, which is, again, historically, the Hegelian end result of mismanaged financial policies, debt policies, and politicians who are extraordinarily ignorant of basic economics. And again, left or right, I'm not going to pick fun on a particular party or particular biography, but Biden's chief financial advisor was recently interviewed, and it was embarrassing. He literally could not explain what quantitative easing was. This is his chief financial advisor. He did not understand QE. We won't get into the definition and a long academic discourse, but your chief financial officer, your chief financial advisor should basically understand how QE ultimately, when mismanaged, and however many forms it takes, official or unofficial, whether it's TGA or through various backdoor channels in the repo markets, printing money out of nowhere is inherently debasing the money. And that impacts the voter, that impacts the man on the street, that impacts the millionaire, that impacts the middle class. It's extraordinary how misunderstood the dangers of that have been. And it's extraordinary that we've got guys like, or people like Kelton and others trying to argue that modern monetary theory is a feasible solution to a debt crisis. That's solving a debt crisis with more debt. A 10-year-old could understand this if you explained it easily. So all of this goes back to the point of really, really either immoral or completely academically or economically bankrupt leadership across the board, Europe to the West. Obviously, the East sees this, but CBDC, I do think, is inevitable, and I do think it's a very dark turning point. I think more and more citizens of the world are aware of that because of platforms like yours and others speaking out openly. You won't see that on Fox News even, or CNBC, left or right media. They don't give it the attention it deserves. It's slow dripping in. And it is just another symptom of another failure and a lack of accountability and a plethora of finger pointing everywhere else but the bathroom mirrors of central bankers and major politicians and leaders of the world who have forgotten that you can't spend like a drunken sailor and solve that money with a mouse click at the central bank. That's a bogus solution. And it's a cowardly way of not taking accountability. And the net victims of that are going to be savers of fiat money and investors of fiat money who measure their returns in fiat money.
Very fascinating breakdown. You did mention the ignorance of politicians to economics. Definitely agree with you there. It seems like a lot of politicians, central bankers, and other policymakers are ignorant. Some could point to them potentially even being evil. I'm kind of in the extreme evil camp. So maybe I'm an outlier in that case. But they seem, you mentioned economically bankrupt. They seem morally bankrupt at best, These are not the types of people that we want making decisions with far-reaching implications. And yet here we are, all while your average person is completely asleep at the wheel. They don't pay any attention to what's going on. Where I live in Serbia, fortunately, the majority of people of a certain age range are very aware of how ridiculous the government is. It's a joke to everybody, except for that older generation who lived through communism in Yugoslavia, whose minds have kind of been programmed to that sort of thinking. And they still have kind of a clouded view of the world in many ways. But it feels like in the West, you think of where I'm from in Canada, all the things that people have gone through there, and yet it still seems like so many people are still asleep. It's clear we need an overhaul of the monetary system. What about the political system? What's the hope of that changing? Is this a situation where once this debt implodes, as you mentioned, Egon, that the political system will naturally and probably very painfully go through a transition as well? What are your thoughts, Egon? I'll start with you.
Yes, well, it's exactly the same as the monetary system. They go hand in hand, of course. And as I mentioned before, we are at the end of an era now, and then the ugliest part of mankind comes out, both as personalities and in their actions. You remember, or you might have read that, you won't remember it directly, but the Weimar Republic, for example. During that time, politicians were killed all the time because it was misery. And we will see the same coming, whether they're being killed or pushed out. There will be a lot of imbalance and unhappiness in the system. And we cannot change a system if the system is not ready to be changed, and if the cycle isn't right. There's no chance of stopping the debt creation now, for example, overnight. And it sadly can, as I said before, only be disorderly reset. So therefore, we have these politicians which are instruments of their time. It's not always an advantage to have lived a long time, but I have. So I've seen many different cycles, and I remember, I was born at the end of World War II. What I remember, the period I remember is early period I remember is in the 50s, for example. I mean, I'm Swiss and Swedish, but I was born and brought up in Sweden, and I remember, with my parents going around visiting churches in small towns or even big towns. The church gates were open. The silver was on a shelf, unprotected. There was nobody stole it, and there was no crime. And if you wanted to frighten somebody who was, a friend, a young boy or 5, 7-year-old who was nasty to you, we would say, "My father is a policeman," and everybody with respect, they'll be afraid then. There was respect for law and order, and it was a wonderful society. So, but those days are over now, and there's no respect for anything today. There's crime at the level which is totally unacceptable. And sadly, in many countries in the world, especially in the West, the uncontrolled migration into the US, into Europe, into Germany, into Sweden, etc., is leading to very, very high levels of crime. It's not the immigrants' fault. It's the government's fault that's taking in more people than they can look after, school, give housing, etc. And instead it just taxes the government's finances. So of course we need a different kind of politician, but that happens in the cycle. That cycle is not right for that now. It's going to get worse first. When we've had an implosion, people are going to of the debt system, which was creating all of these political problems. Then a different kind of leader will emerge, and nobody will ever use debt as a tool to run a country anymore. And the central bank will not be allowed to print money at that point. But we are not there yet, and can only happen. It only happen, in my view, by a disorderly reset. Then, as I said, there'll be a reset of the financial system, and there'll be a automatic disorderly reset of the political system by people choosing totally different leaders than today. That's the way I see it. And I think if we look back in history, that's what happens also. People want change, but that can only happen when the time is right for it. And right now, it isn't. So if anyone who tries to, Milei, I think it's fantastic what he's doing in Argentina. I hope he succeeds. But the system around the world is against him. So I think he's probably come a little bit too early. He cannot turn Argentina against the trend of the whole world. So I hope he will succeed, but I think it'll be very difficult for him because we have to have this disorderly endgame first, in my view.
And I think
and Matthew, go ahead.
I would just follow up. This political question is directly tied to the financial question, which is directly tied to the information question, the media, the free press, the First Amendment in the U.S., and the principles of free markets in Europe and Asia, wherever. But Baron Rothschild famously said, if you give me control of the money, I don't care who's in power. So it's very important to control the money. The second most important thing to control is information. That's becoming increasingly centralized in Europe and in the US and in the West. It's not an exaggeration to say anymore, when you look at the corporate ownership structure of the legacy media, that they're directly tied to politics, left or right. So truly objective, open debate with math and facts and history, as opposed to politics, propaganda, and excuses, is all combining right now. The failure, if you can control the money and you can control the message, you can control the masses. They're losing control of the money and they're losing control of the information. As long as they can control the information and blame things on each other, fractured, tribalized disunited States of America, fractured, tribalized European non-community. As things break down economically, it gets harder and harder to spin a narrative around it of responsibility. And when that narrative is no longer believed, when you've gone 4 days, quote unquote, without a meal, that's when things fall apart. The problem is with history, when things fall apart, it's usually not Santa Claus, warm and fuzzy, who comes in to fix things. If you look at history, it's either a Napoleon, a Franco, a Mussolini, a Hitler, a Castro, left or right, whether you think they're good or bad. Most of them didn't end up good for society. Things break down, opportunists come in, and there's more and more struggles. Optimistically, I'd like to hope that we can avoid that cycle. I don't think the US or Europe or the West is exempt from it. I think we're going to see politicians are like great armies, like the Wehrmacht or the Army of Northern Virginia in the Civil War, or like the Grand Army under Napoleon. They don't die easily. They don't give up easily, even when the math is clearly against them towards the end. And since they won't give up power voluntarily, it's going to have to come democratically. But that democratic process is under so much scrutiny right now, no one trusts it. So it's not going to be warm and fuzzy. It doesn't mean pitchforks and violence, and hopefully not Weimar deaths and what happened post-Weimar. But I don't think we can sit back and look at the next 10 years with the confidence that they'll be as nice as the 80s or 90s with the be calm, carry on narrative that worked during the Blitz. I think citizens, and Egon and I have traveled a lot this year, and we'll be traveling a lot for the rest of the year. I've looked at 11 countries, I think, for the next 12 months this year of 2024, whether I'm in South Africa, Singapore, Europe, the US, Canada. I was just in Vancouver in January, obviously. But everywhere I go, rich or poor, left or right, you feel it. In the Midwest, to southern France, to Italy and Spain, everywhere I go, people feel something's off in the universe. There's something broken in the force. There's a disturbance in the force. Many, of course, don't understand financial markets and monetary policy, or the mechanizations behind the European Central Bank or the Federal Reserve, or these various economic centers, but they do feel it and see it and don't trust it. They know that they can't afford to take a trip to Paris because they don't have the gas for the toll, or they don't have the money for the gas and the tolls. That's something new. That's the debasement. That's the real inflation that's not reported officially anywhere correctly for a reason, because it's embarrassing. So the political failure, you could say it's evil or incompetent, Both are unacceptable to me. Both are fairly obvious cases to be made. I completely agree with Egon. I can't think of a really strong statesman right now anywhere. And that convergence of weakness, weak leadership, physically and morally weak leadership, financially ignorant leadership, and opportunistic leadership, where it's more about their interests and their power coalitions than it is about their people, I don't think that's an exaggeration anymore. And so that does not bode well for a clean transition. So we're going to have bumpy transition, dishonest transition, finger pointing transition, and to your point, centralized transition increasingly, and centralized or central bank digital currency is a symptom of that. But we're already seeing symptoms of that centralization everywhere. To me, COVID policy, silver spike in history, modern history, that was centralization at its finest in the messaging, the control, and the policies. We're seeing it in the media. We're seeing it in our currencies. We're seeing centralization everywhere. So the end game isn't tomorrow. It's right now. It's playing out right now. We all feel it. Many Americans and Europeans and listeners around the world understandably don't know how to explain it. They don't know the history. They don't know the markets. They don't understand how central banks and currency markets work or how bond yields work, understandably. But if they did, as Henry Ford said, there would be revolution if they understood how banking systems worked. If they looked at how the media and the free press works today, it's an oxymoron, the free press, complete joke.
And Egon, I wanted to pull on a thread you were mentioning about cycles and how things can't change when a certain cycle is unfolding and taking place. I spoke to Dr. Charles Nenner recently. Now, people love him or hate him. He claims to be able to time the market by using this cycle theory, but he was describing cycles as kind of a force of nature. He said, what if President Biden gets killed, do you think the stock market will go up or down? Well, that's the wrong question to ask, because President Biden cannot get killed when we're in an upcycle. So he almost describes kind of the events of the world unfolding through cycles that are actually kind of almost a some sort of destiny in a way. I wonder if you could expand further on the concept of cycles as you see them, both politically and when it comes to the monetary system as well.
Well, let me start with a controversial cycle that I see, which is the climate cycle. I think climate is totally cycle-based and nothing to do with mankind. If you ask everybody who is so concerned about the CO2 level, you ask them how much CO2 is there in the air. Not one per million of people will know how much CO2 there's in the atmosphere. There is 0.04%. And if that went to 0.02, we will all be dead. So it's a very, very fragile balance, that. And if you look back in history and you look back at tropical Rome during the time of Christ's birth, I did, so it was very warm then, but I didn't see that being caused by CO2. I haven't seen any cars or other things polluting the atmosphere in Rome. In pictures, maybe they have hidden them, but so I know this. Most of the world don't agree with this, because the politicians have done very well in making this into a political issue rather than an economic issue, because again, it gives them more control of the people, and so the majority of people believe in this. It's a fact that 84% of all energy today comes from fossil fuels. That cannot be changed overnight, and a windmill cannot change that, or an electric car cannot change that. We hope all, of course, that the atmosphere will become cleaner, but that's another matter, totally different. So that's another cycle. And if you go back thousands of years, you see periods when CO2 which was a lot higher than it is today, and there were no fossil fuels at all, etc. So that's a cycle, so you have political cycles, you have economic cycles, and then you have war cycles. I'm not an expert, for example, of a war cycle at all, but I have been studying it for many years, and it was very clear for a long time ago that during 2010, 15, etc., we were starting a war cycle, and it's happening. And of course, now the whole world is arming them, and the weapons industry and everything linked to war. Everybody's now stocking weapons and all equipment needed for war, etc. It's wonderful for that whole industry, of course. And it's become self-feeding, of course, like the membership in NATO, which was extremely low 40 years ago, and now Russia is surrounded by NATO countries, as an example. So that's another cycle. Now, we are at the end, as we discussed throughout our discussion today. We are at the end of a cycle in the economic cycle. Personally, I think it's going to end between now and sometimes latest in let's say mid-30s. But it's no use forecasting that, because I've learned one thing that there's forecasting, as I mentioned before, is a mug's game, and to pinpoint a certain time when the gold is going to peak or the dollar is going to collapse or whatever, it is meaningless. We follow the cycle instead now. The cycle is clear. It's done. The economic downtrend is going to last for another number of years, as we have discussed. And with that, we'll follow the political debacle that we will see. And there will be political unrest, that's for certain. There will be governments coming and going all the time. And there could even be anarchy. And then, in the US, you have a and I'm not the expert, Matt knows more about that than I, but we can, as observers, we can clearly see that this election has the risk of being very, very dangerous for the country, because whatever happens, the other 50% is not going to believe it. And that could lead to very unpleasant situations also. And you have the same in many other countries, France and Germany. We will have the same there. The unrest will be there, and of course, and when the next phase of the bad times are not here yet, because we thought that that the world could have collapsed in 2008 with the financial system. It didn't, and they've done very well, central banks, in keeping it going, but at a cost, which will mean that, and that's why central banks should be abolished totally. They should not interfere in the natural cycles again of the economy, and because the economy, like many cycles, are self-regulating, and they'll do much better without human interference. But they will interfere, and they interfered 2008, and that means that we have a debt which is, including the derivatives, 3, 4 times, 5 times as high as it was in 2008. And when debt goes up 3, 4, 5 times, risk goes up exponentially. And that's where we are now. And that's why the fall, because of this intervention in markets and in world financial system, will be much, much greater, the consequences of this. So that's, and we are going to see political unrest. We are, the people will be blamed for this also. Governments will be blamed. The majority will be blamed the minority, and that sadly means that they're also going to blame the immigrants for this. And then there will be new Nazi type parties coming up, etc. in many countries. So it will be unpleasant. It'll be a very unpleasant transition. But the world, the world is going to be here in 50 years' time or 100 years' time. It's just the period of transition will be tough for many, and for everybody, I would say. So that's what I see in the coming years. And at the end of the day, what you look after is first your family and your friends, and that's the number one. And then you put your finances in order, whatever way you can. Reducing debt. If you have savings, hold a little bit of gold and silver, because that's going to, in every period of crisis, gold and silver is all in money. So these are the measure, and you don't have to be rich you can buy an ounce of silver for $30. You can buy 2 ounces for 60, and most people have got that much money, and that would maybe worth many times more in a few years' time. So these are the kind of things people could do to protect themselves. But as I said, people have lived a normal life in war zones also. So we just have to look after, especially our family and friends, and then we just life goes on. And I'm a great believer in doing what you can to protect yourself, and then enjoying life, because there's always things in life you can enjoy.
Yeah, absolutely. Very well said. And Matthew, your thoughts on the various cycles, how you view them. It's interesting, Egon, that you touched on there's going to be kind of extreme political parties coming up again, because I've noticed there's some speeches on YouTube, Hitler speeches, and some of these have millions of views. Some of them have been digitally modified to actually sound like English coming out of his mouth. And the amount of support in the comments for what he's saying from people now saying, wow, what a visionary, he was so right about this or that, is absolutely insane. And these comments have thousands of upvotes. It's like all these people who think this is great. So I think the environment politically, kind of on the other side of this far left movement, is perhaps, not all rainbows and sunshine. But Matthew, I'd like to get your view on cycles, and as well as how you see things playing out politically in the United States.
Yeah, I mean, there's a lot of discussion on cycles because if you understand history, as Mark Twain famously said, it doesn't repeat itself, but it often rhymes. There are cyclical categories, whether that's in currencies, politics, markets, wars. Neil Howe's Fourth Turning is a classic example. It's very popular right now. Doug Casey's writing about cycles. Jim Rickards talks about cycles. When I look at it as an economist, as an investor, and as a history major with a very passionate interest in history, I've said this many times, and I'll say it again now, and I've seen no exception to this, none. Whether you go back from Ming, Rome, pre-Christ, post-Christ, today, Yugoslavia, Weimar, North Africa, everywhere in the world, the US, Britain, the Dutch, the Portuguese, the Spain, whether you have a democracy, an empire, or a monarchy, whatever form of government, whatever time in history, pick a time on the calendar, pick a time on the map, you'll have a debt crisis at some point. You'll get over your skis in debt. And then you'll debase your currency to pay for that. You'll have a market crisis, a currency crisis, and then an inflation crisis in some form. That currency crisis, inflation crisis always leads to social unrest. Again, ancient Rome to today. That social unrest is always responded by extreme centralization from the political left or the political right. It always has. And it's amazing the arrogance of debt-soaked nations who don't see the symptoms of that and don't take accountability for that. I wrote an article recently about Francis Fukuyama's book, The End of History, The Last Man, came out when I was an undergrad. It was a very arrogant statement that liberal democracy and capitalism had won. This was 1992, the wall's down, Russia's gone. Capitalism and democracy is the end of history. It's the climactic victory. Fast forward 30 plus years later, we have the same profile in a lot of ways in the West that Russia did before, the Soviet Union did before it collapsed. This is something Luke Gromen talks about brilliantly. In other words, history doesn't come to an end game, it cycles. And it always cycles with people over their skis to stay elected, using debt from Nixon forward and Nixon behind to stay elected, to stay in power selfishly at the expense of the masses, at the expense of the people. The people get angry and an opportunist comes in, whether that's a Napoleon, a Franco, a Hitler, saying what you want to hear to galvanize more power. It's hard to imagine a warm and fuzzy figure coming in. Millet is an example of a blunt figure, an honest figure, the Peronism that he's replacing with hard facts, hard realities. Blunt language, an eclectic lifestyle. It's fascinating. And to Egon's point, he's a pioneer. He's probably ahead of his time. He's fighting a huge current with that type of accountability, honesty, and even the people so far, despite the pains of inflation, accepting the honesty. I think the question for how this could be any different, I doubt it. My view of history is fairly cynical. I think it's going to get worse before it gets better. To Egon's point, that doesn't mean it has to get worse for those that are informed individually. I value my family and my friends, my horses and my dog far more than politicians and cycles of history. But we're all vulnerable. We all are. And I value those invisible wealths far more than the amount of money I have. I always have figured that out from an early age. Doesn't mean that money isn't important. So that's more a spiritual, esoteric question. But the sad reality is we have to be prepared. We have to be informed. We have to be holding these people accountable, the opportunity, the idea that someone could come in and speak bluntly in the West about our debt, about our failed foreign policy, about our failed monetary policy, about the selfishness of our Senate and Congress, about the dishonesty of our media, and try and get that across, that would be a miracle. If it's possible, the second miracle would require the masses, the people, to accept that message and be willing to ask not what their country can do for them, but what they can do for their country, to be willing to trust austerity, to be willing to trust that leader, to be willing to come together and not splintered. That'd be almost a second miracle. The people are equally responsible for being willing to accept buckling down. And even though they've been cheated and lied to and manipulated by their governments, if a new leader came in to galvanize that kind of trust, I think the Americans, the Europeans, etc., certainly my America, if they trusted a leader and they believed in that person's honesty, would be willing to make sacrifices. My country's made huge sacrifices for themselves and the rest of the world when needed. But they believed in their cause. When they stopped believing in their cause, basically from Vietnam or from Lyndon Baines Johnson onward, they don't want to make those sacrifices. They just want more. Give me what I want to hear. And then they're tribalized. So again, it could take hours to get into these examples. I'd like to be an optimist and think a great leader and a great population could come together at the same time. Usually it's an opportunist and a broken population coming together at the same time. And that just creates more control, more oligarchy, more centralization, more fascism. Regardless of whether it's left or right, it's just more control, more dishonesty. And I think the symptoms of that aren't something we have to predict. The symptoms of that are literally everywhere in every domain of our lives, from our media to our social structures, to our government, to our policies, foreign and domestic. And I think that's fairly obvious right now. And that's not very positive.
Yeah, interesting. I mean, I used to think potentially RFK could be that guy. I found it quite amusing, shocking. I don't know what you want to call it. When I don't know if you saw this, he recently posted on social media that he's buying GameStop stock with the proceeds from suing Monsanto. And he posted this graphic, apes together strong, appealing to like the Wall Street's bet crowd. And somebody posted a comment, we truly are living in a simulation. And that is exactly what that felt like. I do want to finish on discussing gold's role in a traditional portfolio. Most investors, financial planners have little to no allocation to gold. The idea of a 60-40 portfolio still being held up as a low-risk way to produce decent returns is kind of still pervasive in the financial industry. Is this paradigm starting to change? Everything we're discussing, the uncertainty, both geopolitically, politically, do you think this is going to drive more people and more institutions, financial planners, and your average retail investor into gold? And Egon, I'll start with you.
Well, this is an interesting question for someone who's been standing on a soapbox for 25, 30 years, talking about gold as the best instrument to preserve wealth. I'm not a gold bug at all. I've just at the second part of the 90s, I decided that, I saw the debt evolution and the debt acceleration starting, and also derivatives becoming dangerous. And so I looked for ourselves and a few families and or wealthy people that we advised how to best protect that. And that's how we set up a system with the safest vaults in the world and the best way to buy the gold, and etc. In our company, and which we started in 2000 basically, and it was only meant for a private group or for ourselves. But then people started asking, can you help us? And so that then we opened it up for outside people to help people to buy and store gold in their own name, and under their control. They can go and visit it in the vault. We have one of the vaults we have is the safest gold vault in the world, and the biggest private gold vault in the world also. So we really worked hard at getting this right. And then the need around the world has increased. Now, in spite of what we've done, and many others have also done similar things, world financial assets into gold are still only 0.5%. It hasn't grown. It might be 0.6 today, but that's it. But we see that changing in many ways. Number one, the countries that are now central banks, as well as the BRIC countries, are now gradually moving into gold. And the fact that what the US did to Russia was obviously a trigger point by freezing their assets there. No central banks will, in coming years, hold the reserve assets in US dollars. It is a dying currency and is a dangerous currency to hold because the US decides when it wants to just, we will take that money away from you. You can't spend it. And therefore, we see a move away from dollar as reserve assets for central banks to gold. That's happening already. You're seeing now the growth in central banks holding the gold. And that's not Western central banks, of course, because they haven't understood yet. They prefer to build up debt rather than gold reserves. So it's Eastern central banks, it's Southern central banks, it's Middle East central banks, etc. And they're not doing it quickly because we are talking about very big moves into gold here, and they're obviously doing it in a way that doesn't push up the price too much. We've seen a bit of a price increase now, but that's just the beginning. In my view, the quantity of gold produced every year by the mines, gold mines, is around 3,500 tons, and that's being absorbed every year without central bank buying. Lately, we have seen the central bank buying, but and that's why the price is moving up gradually. But in order to satisfy the coming demand, plus the demand from the BRIC countries, and at a later stage also the demand from the public who are not buying today in quantity, in order to satisfy that cannot be done by increasing the production of gold. There isn't more gold to produce than the roughly 3,500 tons, increasing by maybe 1 or 2%. A year. So that can only be satisfied by a higher gold price, that demand. But so it's going to be a gradual move initially, but at some point it could be a major move, a major revaluation, because to satisfy this demand and to make gold the reserve currency of the world, which I think will happen, that will require a major revaluation of gold. And how many times gold will, and I hope won't be an overnight reset. There are some people talking about that the US will revalue their gold, 3, 4, 5, 6, 7 times, or whatever it is. And that's a way of solving the US debt problem. That's one way of doing it. I hope it doesn't happen that way, because number one, you revalue gold and then issue money for that gold. I mean, to me, that's not real money either. That's fabricated money. And number one. Number two, in order to take the US revaluation seriously over time, show me your cards. Show me that you have the 8,100 tons of gold. The world is not going to believe that. What is more credible is what is happening, as I said, in the East, and the central, other central banks than Western central banks continues buying of gold in the BRICS country. That's more credible, and I hope it will happen that way, the increase in the gold price, rather than an artificial revaluation that the US does in order to solve its debt problems. It's not a solution in my view. But so there are many possibilities to reach the same goal, and so we will see that, and we will also see the public is very slow right now. They are not following the gold price. There's no gold rush today or silver rush, but that price move is coming, and soon it will be headlines more often, and the public will also come in. But that central bank buying and the institutional buying will happen and is happening. It's another also very important point. We are, as a company, we are now at very serious levels talking about major wealth managers around the world. And these are very big wealth managers. And they are now becoming very interested in gold as an instrument for their clients to protect their assets. And also their clients, which are, like big wealthy people, big family offices, etc., they're also starting to ask about gold. This is not going to happen overnight again, but we see that move happening in over the next few years. So there will be a fundamental move into gold on a bigger scale, and silver will obviously, we can come to silver also. Silver will follow in a different way, so that's going to be, that's inevitable, and we are already seeing the early signs of that. But we are just starting now. Now we have though I started the company almost 25 years ago, and we built it to we're probably the biggest gold advisor, if you want, because we don't hold the gold in our name, but helping people to buy and store gold. We're probably the biggest company in that sector for high net worth individuals. But as I say, we have had very good growth over 25 years, but I don't think we've started yet. What I have been seeing, or we've been seeing for the last 25 years, it's starting now. In spite of the fact that since we started, gold is up, depending on the currency, 7, 8, 9, 10 times, depending on the currency. But that's just the beginning, in my view. So, and I don't, gold price, what it will reach is totally irrelevant, because we're measuring gold in something that is going down by the day. So the only good thing about that is that people should actually take note of the thing that's going down every day. So that's what they should protect. It's not gold going up, it's the money that they hold that's going down on a daily basis. And therefore, people should protect themselves by holding gold. And that, in my view, that is going to happen. So that's, as I see it, an inevitable move now in the gold market, because there are now big forces behind it. And of course, late, but still not too late, the public will follow also. Institutional investors, private investors, etc., will follow. So we are going to have a golden era, if you want. But that is not, don't see gold as something to get rich quick on. It's really protecting your assets that you're talking about, rather than something to. But relative to a lot of other assets, I also see, of course, that stocks and bonds and property measured against gold will go down by very big percentages against gold, because they are bubble assets that have been financed by the debt, as we discussed before. Silver, just to mention silver quickly, of course, silver is still not higher than it was in 1980 or in 2011, whilst gold is. So there is still, and also gold, if you revalue gold based on inflation, or even on John Williams' shadow statistics inflation, gold should be $20,000 or so. And the same with silver, it should be much, much higher. And so it's still far from catching up with purchasing power, or the loss of purchasing power, the gold price, and silver even more so. So I think we're going to get into an era now. I talked about gold being revalued in a substantial way, but also silver will obviously, once this starts, and we've seen the beginning also, the gold-silver ratio, which measures gold against silver, is going to start dropping faster now. And when the move starts, often silver moves 2-3 times as fast as gold. But as we tell our clients, it's not for widows and orphans, because it's very volatile. And if you buy it high and you see a massive correction, it'll scare you out. Wealth preservation investors never sell. And our investors, they hold on to their gold because they're holding it for the long term. But silver is more for speculators, but even for investors, silver is now an interesting investment, because this obviously going to move over $50 and probably a lot higher than that. I mean, I wrote an article many years ago saying that if gold reaches 10,000, which is in paper money, which is very likely, the gold-silver ratio coming down to let's say 15 or so. I mean, silver could easily be in the many hundreds, for example. It's not a forecast. I don't like making forecasts, but I'm expressing a trend that is inevitable, and silver will move faster. But it's in our view, you should hold a much smaller percentage in silver, because you mustn't be greedy here. It's about wealth preservation, not about speculation. That's our view.
And Matthew, your thoughts, maybe if you could shine some more light on the retail side of things. I think in the East, it's obviously more of a cultural phenomenon, in places like India, also places like China, where real estate is kind of the traditional investment, and that sector's faced some difficulty recently. More people are moving into physical gold in that part of the world as well when it comes to the retail crowd. In the West, I think a lot of people are watching Nvidia and they're watching the S&P and the Nasdaq continue to grind to all-time highs, and they're saying, why do I want this when I can have that? What are your thoughts? Will we see a shift eventually in the Western retail buyer, perhaps in the event of a massive market correction or something like that?
Yeah, it's a very interesting overlap of markets, risk assets, and human psychology, which you can never underestimate. There's a famous quote I've mentioned before during the Nikkei rise in the late 80s when I was still in high school. But I remember it. And my business partner, his father, was doing a lot of business in Tokyo. We were teenagers in boarding school. But I remember him telling me stories about the yen and the Nikkei. And then, of course, the big saying in Tokyo in 88, 89 is how can we get hurt if we're all crossing the street at the same time? You know, we're all in this together. We all can't be wrong. And then, of course, in 89, the Nikkei crashed. It hasn't recovered those highs 30 plus years later. It was unthinkable, and yet it was pretty obvious to some. Turning that example of groupthink, and I'm not making fun of groupthink. I understand it. I think you have to understand it. You have to recognize where it's coming from. Looking at the West and the 60-40 portfolio and the chasing of a NASDAQ, a narrow NASDAQ, a narrow S&P, the S&P 5, not even the S&P 7 anymore. It's the S&P 5. When you see a market that concentrated, the psychology gets lost because, first of all, it's a very dangerous sign when your market is, when your S&P and your equity market is led by only a handful of names, which are overvalued, not necessarily bad companies, just overvalued. There's this confidence that, you know, I can chase this top. There's an opportunity cost in chasing the big tech names versus preservation in gold. And so the 60-40 portfolio, maybe less and less sexy, but the concentrated tech portfolio, because the S&P has become a tech ETF, that's a very dangerous sign, not a good sign. The psychology of wanting to chase that separates, again, the wealth preservation mindset from the speculation mindset, because a wealth preservation mindset doesn't chase tops. It doesn't buy gold and then sell it when it gets to 26 or 28 or 3,000. It holds it because it's there as insurance against these joke currencies that measure your wealth. If you're up 30% on NVIDIA this year, you're still measuring that in fiat money that is losing value because of misreported inflation, taxes, et cetera. You're really nominally looking sexy, but in real terms getting killed. And that's not an exaggeration. But again, you have to understand, why are people speculators? Because they're trying to make some kind of money. Gold will not, as Egon says, get you rich. It will preserve what you have. The sad reality is, for most Americans, they don't have a lot of money to preserve. And even as silver is reaching not all-time highs, but relative, it broke 30, 32. It's not near 50. But even when silver is going up and gold is going up, you're seeing retail investors, speculators, not wealth preservation, selling at any new high or local recent high because they need money, not because they're stupid or enamored of NVIDIA or the tech names, because they literally need the money. And so when we're talking about wealth preservation, Egan's point, anyone, rich or poor, can still preserve wealth with gold and silver. It's just smaller increments. But I can understand a mindset where I've got a chance to double my money in a quick NVIDIA play, or I could also lose half. Why would I just go to wealth preservation? I need to get through this. And that's the speculation mindset. I don't criticize it. I had it in my late 20s. That's what got me to the money I needed to then preserve it. I don't mock those that are speculating. I do caution them to be very careful chasing a blow off top in the name of a few sexy tech stocks, and to think real carefully. If you're buying silver or you're buying gold and you're doing that to speculate, fine. You can buy at 24 and sell at 28. Okay, that's not the reason in our mind to be with gold. And that'll never be a good enough reason. And yet you're seeing, even as silver reaches these recent peaks through 30, you're seeing the silver ETF seeing outflows of 800 billion because they need the money. You're seeing literally Japan needs the money. They're selling too. But I mean, the point is, when you have the high class problem of recognizing the role of gold and the role of silver as a monetary metal, as a wealth preservation asset to insure you against dying fiat money, which is dying right before your eyes in misreported inflation, even former Treasury Secretary Larry Summers says we really have inflation about 18%. So you're losing money. If you're getting 18% on NVIDIA, you're net nothing. But if you're buying gold to preserve dying purchasing power as insurance against dying currencies, then you're not chasing narrow tops and you can sleep better at night. But I understand that many of your listeners are trying to get some type of return, or many retail investors are trying to get some type of return in something. They're literally picking up quarters in front of a moving train when you look at the actual real value, not the nominal value of a US Treasury or a dollar bill or a yen or a won or a peso. So you've got to understand what your motives are. And if it's pure speculation, you've got to understand real rather than reported inflation. And if you have any wealth at all, you've got to understand speculation versus preservation. 1% of family office allocations up till now go to physical gold. That's appalling. It's appalling. That's a misunderstanding. A lot of these family offices understand how to make money in industries and selling companies or in tech. But once they have it, they're being advised by bankers who are taught early in banking not to sell gold, not to push gold. That's a lot of reasons why. It's deliberately misunderstood because gold is a threat to that system. It's a threat to that dollar. They don't understand the difference between preservation and speculation. They're looking for momentum. They're looking for annualized rate of return, but they're measuring that in an ice cube that is literally melting in front of them. And so an allocation to physical gold is not gold bugging. Egon and I are not gold bugs. We're wealth preservation thinkers. We're historians with economic background who measure our wealth in grams and ounces, not in fiat money. And that's not a gold bug argument. There's a lot of sensationalism. There's a lot of noise out there in the speculation space and a lot of it in the precious metal space. But when you really soberly, quietly sit down and think about the history of money and the value of money and what is money, this becomes axiomatic and obvious, not a gold bug argument. And I think it's really high time that people get more and more informed about that. And then once you understand why you need precious metals, if you're at a higher enough level, you have to understand how to own it and where to own it, where not to own it, and how not to own it. These are complicated things, but they're also very simple things. It's really very simple. We're over in debt. Our bonds are losing price because no one trusts them. Yields are going up. Rates are going up. We live in a leveraged world. When rates go up, everything levered dies, whether that's a nation, a company, a derivatives market, an individual, a family. These things are happening right in front of us. That's not gold bugging. That's just math. That's just empirical evidence. And gold is not the answer to all the problems in the world, but it is such a simple answer to wealth preservation. And you have to decide, are you a wealth preservationist or a speculator? That's a very different mindset, very different answer to the question.
Well, gentlemen, this has been a fantastic conversation. Thank you so much for coming on. Before I do let you go, tell us about Von Greyerz AG, as well as where people can find your work. I know you have a YouTube channel as well. You write articles. Is that on the website? Where can people find all of that?
Yes, thank you, Jesse. Well, so the company is called Von Greyerz, and the URL or the website address is vongreyers.gold. To make it simpler, you could just type in vg.gold, so vg.gold. And so we help people around the world in 90 countries, high net worth individuals. Our minimum level is 400,000 for some of our vaults, and for our mountain vault, which is, as I said, the biggest private gold vault in the world. There's a high minimum, it's $5 million. So it's not for everybody, but we can recommend if people have smaller amounts, we can recommend other partners, etc., who can deal with that. But this is the type of clientele we have around the world, and people own it in their own name, and they have access to it, as I said. And we are based in Switzerland. We have a Swiss company regulated in Switzerland. Of course, gold is not a financial asset. So if an American holds gold, for example, in a vault, not in the bank, in a vault, private vault, outside the banking system, it's not a financial asset, and it's not reportable at this point in America. That can change, of course. But obviously, if you sell it and make a capital gain, then you have to report a tax gain on it. So it's no question of, we don't have clients who hide their money in any way. It's totally overt system and transparent. But as I said, we're helping investors around the world, so people can just go to our website, vg.gold, and they can read about it, and they can call us, or they can send a message, and we're happy to help people. This did not start as a business, was never intended. I mean, was a passion for me to help other people. But now I think the need, as Matt just also explained this, the need for wealth preservation is here and now. And therefore, we hope that 0.5% of financial assets in gold not for our sake, but for the sake of the people who need to preserve their wealth, we hope that that percentage increases. But remember, if it only goes up to 1 or 1.5% of world financial assets, there's not enough gold, so it can only be satisfied by much higher prices. That's going to come. So gold is still at this level, between $2,300, $400, is very, very cheap in our view, measured in fiat money. So we were very pleased to help anyone who comes to us, or even read our articles and listen to our views of the world.
Great. Well, I'll put a link in the description below to Von Greyer's website. Thank you once again, gentlemen, for coming on. It's been a blast.
Thank you, Jesse. It's been very interesting discussion, and thank you for allowing us to participate. Thank you very much.
Yeah, thanks, Jess. It was a great time as usual.